ladies and gentlemen, welcome back to another Bitcoin video. I've just come out of the eye surgeon. I had a couple of eye injections today, so my face in general is very not ideal for camera, and my eyes are very red and swollen, and so I haven't got the cameras today, but I am bringing you a quick video here. It is 2 a.m. I was resting and I got up and I thought, got to make a video, can't go to sleep without it. I saw Bitcoin moving and I thought, let's just make one quickly here. Let's just pump one out. So a 5-minute video, if that today, just a real quick one. And tomorrow we'll be back with more detail because I need to rest up after this. So let's get straight into it, guys. What's happened recently? Well, something's happened exactly what we expected to happen, to be honest. What happened was, we broke down from the pink ascending wedge formation. I was of the opinion that Bitcoin was in a very bearish position for the last couple of days, right? We had an ascending wedge formation. We had a clear bearish divergence on the RSI. Daily chart, let's flick back to it. We can see the volume on the daily chart was downtrending quite rapidly in this upwards trend, and we were also going towards the upper part of the Bollinger Bands, representing being completely overbought. So we weren't in a good position there. Flipping back to the 4-hourly chart, we can take a little closer look of what happened. I said, if we break down from this ascending wedge formation, it's very likely we do. And if we do break down, the highest possible local bottom will be this uptrending yellow line. Now, this uptrending yellow line stems all the way back from October 2022. And guess what happened, guys? We came down as expected, tested that uptrending yellow line, and got a perfect long position as per my last two videos on that line. And we have bounced very strongly to the upside. Now, the question people are asking is the drop over? Now, unfortunately, this question isn't easy to answer. It was very easy to answer yesterday while we were in that wedge formation, that channel formation, sorry. It was very easy to answer because everything was flashing bearish and we had a bearish structure. Right now, everything is flashing bearish still. For example, volume, for example, RSI, it's all still bearish, but we don't have a bearish market pattern at this point in time. So it's kind of hard to say we're just going to drop down further. What we could end up doing is we could end up doing something very similar to what we did in 2019 during a very similar period of time. In 2019, we had a rounding bottom, just like we have right now, and we also had an uptrending yellow line that stemmed months back before the low, right? And what you can see is that I've roughly drawn it here. I can fix it up just so it's a little bit cleaner for the video, but I've roughly drawn it here. It's essentially this line here. What we saw is that we were testing a major resistance zone, right? Horizontal resistance. The equivalent, it was at 6K, which is the equivalent of 28.6K this time, right? Because 6K, of course, was the bull market support zone, and 28.6K is, of course, the bull market support zone in this cycle. We were testing that level, but upon breaking the yellow uptrending line, we didn't actually reject for very long at all, and we zoomed to the upside further. We could very well see something very similar to that happening right now. We're testing that level, okay? We've seen a brief rejection. We've broken the uptrending yellow line, though, and that means if we're following what we did in 2019, we could actually continue and zoom to the upside, just like in 2019. So for that reason, it's very difficult to say exactly what's going to happen next. Again, a couple of days ago, while we were in this channel, it was very easy to say what was going to happen next. We said we're going to drop. It's very easy to say that when you're in a bearish structure. The problem is we don't have a bearish structure in the short term right now. We don't even have a bullish structure. We have no structure. Now, if I was to lean, purely on short-term TA, I would say it's probably likely that we reject further and consolidate downwards a little bit. We've got bearish divergence everywhere. We've got volume descending. It's not looking particularly good. But this fractal here from 2019 does give a glimmer of hope to the people who are short-term bullish right now. Now, regardless of that, I would not recommend longing. Okay, not right now. I'm macro bullish on Bitcoin. You guys know that about me. I'm macro bullish on Bitcoin. I think Bitcoin's going up in the long term, but I don't think it's logical to long into a major resistance zone such as 28.6K, which we held for support throughout the entire 2-year period of the bull market, and it's acting as resistance right now. You don't long into something like that. You wait for something like that to break, and then you long once it's broken. So how will we know when 28.6K is broken? We will know clearly via a weekly candle close. A level like this, right, that is constituted on 2 years of support and now going on a 3rd year becoming resistance, that's something you need to wait for a weekly candle close over, and a strong weekly candle close at that. Once we get that weekly candle close above 28.6K, and this is something I've said time and time again throughout the entire bear market. You can go back 8 months ago and I was saying the same thing. Once we get back above 28.6K on a weekly candle close, the market flips macro bullish. Okay, let's make a distinction here. I personally have been macro bullish in 16K. You guys know that. You've watched my channel. But that's my opinion. That's not the charts. The charts flip macro bullish on a break of 28.6K. So this level here at 28.6K is a very, very major challenge for Bitcoin. It's a very, very major zone. I'm sorry that I can't give you any precise predictions for the short term. I already gave you that 2 days ago and it played out. At this point in time, it's very difficult to say exactly what's going to happen in the short term. We haven't seen enough price action. We haven't seen enough price action outside of this wedge to form any real new structures. I'd still say it's leaning probably a bit bearish, but at this point in time, that's all the clarity I can give you. I do want to quickly go over what happened yesterday, though, and that was the interest rates decision, of course, the FOMC decision. We saw a 25 basis point hike, and now in the next FOMC decision on May the 3rd, it is more likely than not at a 52% probability that we don't actually hike any further. So that's very important, because what that means is that the bearish argument falls apart. And this is something I discussed yesterday. The bearish argument, or one of them at least, and one of the strongest ones in my opinion, is predicated on the belief that Bitcoin will only bottom out when interest rates top out. Now, we have evidence to suggest that interest rates will be topping out on the 3rd of May, okay? If we're looking at what happened in the previous cycle, interest rates topped out, Bitcoin bottomed out at the same time. That means, if we're following that bearish argument, which I think is weak now, that means Bitcoin will have to drop to a new low, would have to drop 45 to 47% within the next 5 weeks, which is very, very, very unlikely. What's more likely is the 4-year cycle is correct, and everything we suggested about the 4-year cycle theory, including being the Q4 bottom, and including the Q4 top in 2021, the Q4 bottom in 2022, what's more likely is that is correct, and the cyclical theory will prevail. Now, look, obviously there is a small chance that the market goes down still because we haven't broken that 28.6K level on the weekly, of course, but I think it's unlikely at this point in time, and it's probably more unlikely than ever, especially what's happened in the US recently with the banking crisis and all that, and the bailouts and that driving the Federal Reserve to print $200 billion, reversing 6 months of QT in about 3 days of printing. Yeah, I think that's pretty bullish for the financial markets. Now, obviously, it's terrible for the economy, but you guys have to understand this. Financial markets and the economy are not the same thing, okay? The economy was terrible in 2020, and guess what? We had the biggest bull market in S&P 500 history, okay? So let's make a distinction here. Financial markets and the economy are certainly not the same thing. If the Federal Reserve prints a shit ton of money, that's very good for Bitcoin. It's very good for stocks. But I want to make a distinction here as well, because a lot of people are saying things like, oh, Bitcoin's going to get dragged down by the S&P. I know I sound like a broken record, but I want to go ahead and debunk that claim. There is no evidence to suggest, okay, and I'm being very, very honest when I say this, not biased at all. There is literally no evidence to suggest that Bitcoin will be dragged down by the S&P 500. You can claim that Bitcoin is correlated to the S&P 500. I can come back at you and say that correlation has decreased 3x since August 2022, and Bitcoin, as of right now, is almost reverse correlated to the S&P 500. The correlation coefficient is 0.2. You need a 0.5 correlation coefficient in order to consider something correlated by definition. So Bitcoin is literally, not even close to being correlated to the S&P 500 right now. It's not even close to being correlated to the NASDAQ. It's actually reverse correlated to the European markets. And in the recent couple of weeks, given as, measuring correlations generally happens on a 30-day basis, given the last couple of weeks, Bitcoin moving upwards so rapidly, we can only assume that correlation is going to decrease even further. And then on top of that, you're claiming that traditional markets are going to go down further, which, by the way, isn't even particularly guaranteed either, considering the Federal Reserve potentially might even be entering quantitative easing again, in which case they would pump. So it's very, people say I'm speculating when I bring up the 4-year cycle theory. I would go back and I'd say you're speculating 10 times more than me if you think Bitcoin's going to get dragged down by the S&P 500 and the NASDAQ. Now, I'm not saying it's not going to happen. I'm just saying there's no evidence for it. It's not even my opinion. It's just the facts. If something has a 0.2 correlation coefficient to something else, that's not something that's going to get dragged down by something else. You understand what I mean? So maybe in the future, if the correlation builds back up again, then we could start discussing it. But at this point in time, it's completely off the table. And what we really need to be watching is the charts, and this is something that I've said over and over and over again. You can look at macro events, you can look at, fundamental analysis all you want. But at the end of the day, the charts reflect the fundamental analysis. If something looks bad in the fundamentals, it's going to look bad in the charts as well. And so the charts are much more important than the news. I see lots of analysts So it's constantly scouring the news and seeing what's going on. It's like you understand the charts reflect what happens in the news. The charts in themselves are basically the news in a strange way. So you should look at the charts first and foremost and look at the news later. And that's what I've been doing. And that's how we've identified this 4-year cycle trend. One of the only people on YouTube to identify it to such an extent and stick by it to such an extent. And that's why we have been able to sell Bitcoin at 63K and buy Bitcoin around 16K to 19K. That's exactly the reason. So thank you guys for watching. I'll end it there. Watch 28.6K. It's the important level at this point in time. It's hard to say exactly what's going to happen in the short term, but it is interesting to see this powerful move upwards after a resistance support flip on this yellow line. It's definitely slightly bullish for sure. It's just a little bit hard to say at this point in time. So without further ado, check out the BitGet exchange. Sorry. This is an exchange with 5 times the lower fees than Binance. It's an exchange that I've been using personally for over a year for my personal trading. It's got copy trading. It's got a protection fund. It's non-KYC or optional KYC, I should say. It's an exchange you should be using if you are a trader, if you trade regularly, if you just buy spot, if you trade futures. This is the exchange you should be using for sure. If you sign up using my referral link, which you can find in the description below, you'll get a 15% trading fee discount for life on this exchange. That is major savings on fees you're getting there, on top of the fact that the exchange is incredibly cheap to begin with. So go ahead and check that out for sure. And then of course the Crypto Academy courses. If you want to learn how to trade, this is the place to do it. You can check out the website. All the information is on the website. You know, you were looking at market patterns, we're looking at indicators, we're looking at candlesticks, we're looking at trading psychology, which is something that's very underrated. Psychology is a very important part of trading. And for that reason, and all the other reasons I listed, you should definitely check it out. You know, it's free to check out, and you can throw us an email at cryptoacademycourses@gmail.com and request a video tutorial of what the course is before you purchase as well. So go ahead and make an educated decision. It's completely free if you choose to do so, and all the information for that, again, is in the description below. And finally, as we come towards the end of Q1, I will be releasing the trading results for Q1 for the VIP group. If you're interested in the VIP group, it's 100 USD for 3 months, and we post 5 altcoin trading signals a week. So if you want to trade altcoins with me, that's the place to do it. Again, description below. Thank you guys for watching. I'm sorry for sounding a little bit drained. I am a little bit drained at this point in time. Again, I just got out of eye surgery there, so we'll see how that goes. But thank you for watching, guys. Hope you enjoyed, and I'll catch you tomorrow with a more extensive update.